A banana a day keeps the bears away. Baby dolls, this is the Bitcoin chart. We're going to go through some juicy pieces of information today. Please keep your back straight for this one and make sure you get your fluffy slippers ready for this. We have a retraced grayscale fake announcement. We remember that. And we also diddling around this zone. There's not much actually going on because if we zoom out, we put it on a weekly, all our worries come down in here. Now, what I've been seeing floating around on Twitter and YouTube is everybody emphasizing this candle, this weekly candle. They're like, oh my gosh, it's some sort of gravestone. Actually pretty funny. It does look like a gravestone. It goes, oh, you're going to be buried into the floor. Let me tell you something, man. There are a lot of wicks in crypto. A lot. And people who try to make these candle trades, they don't usually do well. When it comes to just, I'm going to describe the candle. It's literally 50-50, man. People who do trades, they're looking for supports and resistances and wicks around these areas, but they're not using it for the next round of move. They're just using it as key pieces of information for what they want to do on lower time frames because it's so volatile. And with that volatility comes a lot of uncertainty, but sometimes we can have a look at the picture from the past and it might push something in front of our eyes that we won't otherwise see. So if we bring this up, there is a very similar pattern of behavior. This yellow fractal, this is the Mt. Gox Ponzi cycle. And if we bring it down, you basically get to see what's happening. So don't worry about the specific prices and the retracements. It gets a bit hard when you're dealing with that. It almost gets nearly impossible. Like for example, during this period down here, if we zoom in, you can see if you're following the fractal too much, we had the FTX collapse precisely when it was going up on the fractal Mt. Gox Ponzi cycle, so when it was the equal amount of distance from the previous all-time high. So that's why when we were here, if we zoom in, see if we were just right here, we were just assuming we were going to go up, but then FTX happened on the way down. It took us by surprise. And then also, look at this, we started getting this, and then we started getting that. This was just a run up out of the Mt. Gox Ponzi cycle, but then this was the USDC depegging. So how are you meant to like pick that apart for a narrative? You're not. The answer might lie somewhere in between where you don't focus on the price, but you just look at it in terms of human emotions. Now, humans, which you are and which I am, our cycles of emotions, they just take turns. They take turns. Could it be the moon? Could it be the planets? I don't know why. Our hormones, maybe everything combined. But we have periods of fear and greed, uncertainty, and it rotates around. It rotates around. So when we're looking at this, don't look at it in terms of, well, are we going to move like 30% up in a week or two? Don't think of it like that. Just think about it in terms of how much time have we spent rinsing everybody out? You remember from my previous teachings, which you like, subscribe, bell button, and all. Thank you very much. I appreciate every single one of you. You remember that I always talk about these multiple cycles of hope and disbelief. Because these hope and disbeliefs, this is what I remembered from the previous cycle. And I remembered all those big macro swings up and macro swings down. And every time it went, by the way, I was a bear back then. Every time it went down, I'm like, keep going down, 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 down. And then it would go back up and there was hope and then it would come back down and disbelief, hope and disbelief, rinsing over and over and over. So you might even find that on this part, on the yellow part up, this was the first hope part. And then you have like this first disbelief, like we're not going anywhere. You might find that was one of the first signs of it happening. And then the next big one becomes the Bitcoin halvening. See this run up here in the yellow part? That's actually front running the Bitcoin halvening. Now, we're a bit off because the Bitcoin halvening is moving closer and closer each time by a few months. But it is fascinating to see otherwise. So if you just line it up, I know this is going to sound really spooky, by the way. Do you know when the next SEC ETFs are for the decision? They're actually in mid-October. And if we follow this fractal, it says we go up mid-October. Now, these things, they don't have to work, man. Like, for example, we can just start having a green September and then go sideways. And then, you know what I mean? But we could also just keep going down and ruin everybody's party. But it'll be interesting if they actually approve it in this mid-October one. It'll be crazy because it's... And then you look back and go, that's weird. How the hell did this weird, ominous, strange unicorn fairy dust fractal predict this? You know, there are a lot of these interesting things that happens in charts, and I don't know why. I don't know if it's us, if it's the reptiles, aliens, or everything in between. It is what it is. You just got to take it and you got to roll along with it, friends. That's why when we see these happen, I don't want you to like hyper fixate yourself. Like, oh, okay, what's the next one? What's the next one? Don't think about it like that. What I want you to do instead is you put a tool into your toolbox. Okay, we're going to draw a little tool, a little hammer. So what happens is your little toolbox here, right? So just remember, when we eventually get to a euphoric phase, and we might even find that Bitcoin goes up to like, you know, maybe Bitcoin just goes up to 42, 48K. What we might find is a lot of partying, a lot. And what type of partying would I be talking about? Well, people are still going to have their pants on, maybe down to their ankles, but they won't be saying, oh my God, it's all over. Like it's the party. Not going to be saying it like that, but they might be having a different type of party. They might be saying the bear market's officially over. The bear market is done. Congratulations. We have now concluded the bear market. This is what I heard back here. The very top of the plus token Ponzi up here. I specifically remember people popping champagne bottles on the YouTube videos, and I didn't know how to navigate myself back then, so I was very limited, but it was like, really, this is the end of the bear market. We've done it. We've finally conquered. Yes. It was that type. Now, we're going to know if we start hearing that, it's basically, you know, it's go time. Now, it's go time for the bears to get long at the very top. That's what they're going to do. And I don't know how it's going to transpire after that, but, we got the Bitcoin halvening here as well. So, just a quick reminder, if you draw a fib in every cycle from Bitcoin's top to its bear market low, and you go to around 50% zone, so for us, it's $42,000, around this 50% is a super, super danger zone. 3 out of 3 times. Now, it could hit, just below it, or it could hit the 61.8, but somewhere there. You never know. You might go from 42, stay there a week or two, and then pop up to 48,000 and come back. In the previous cycle, I just want to show you again what I mean, because this is really important, friends. This is the first thing you got to think about. If you have any liquid positions, this is where you're going to have to swing something around. This is where you don't have to do what you want, but I'm going to. And that's why I'm not telling you to do everything. Of course not. But the way I see it, hey, what harm do you do if you took out 10%? 10%. Some people want to do 25%, 20%. What harm do you do? What if it actually comes back down and alts have like another minus 50% from that point, which still makes a big high or low? You're gonna be really happy if that happens, right? At least you have something to play. And let's just think about this, okay? This is the previous cycle. See, it comes back exactly to this 50%. It actually touches this 61.8. It's just that I don't want to fixate on this, because how the hell are you going to sit there and get the one day that it hit this 13,400? I remember literally that night that it hit that. I think it'd be better off you think of it like a zone. You think, okay, around this 50% zone. And this happened every single time. Now, this was the Mt. Gox Ponzi cycle. If we go back to that was the plus token Ponzi cycle. If we go back to the Mt. Gox one and we have a look at this, well, what was around the 50% zone, it brings us to roughly $700. But look what it did. It taps $700, goes to the top. So let's say you got out $700 and you wanted to buy back in Bitcoin in, like, it doesn't really give you that much time. It comes back to around minus 30%, right? Because our lowered volatilities here, maybe we do minus 20%. The people think they know what's coming next, but not really, because you don't even know, are your altcoins, like if Bitcoin does a minus 20% from its zone, are altcoins going to do minus 20%? That's not even that much. That's nothing. That's very risky, because what if they keep going and you're wrong? So if we go to like 42,000, let's say it does hit 42,000 and we do like minus 20%, okay, it comes back to 33,000, right? So we got to think, generally altcoins go down a lot, but we're not guaranteed that. What if altcoins are still kind of moving around then? And but it is something to think about. At least you have an option. This is what I want you to think about. At least you have a tool in the toolbox. And speaking of tools in the toolbox, you are also armed with the power of friendship. The US jobs data that just came out, okay, it was pretty good. It was pretty good. Unfortunately, what's good for markets is bad for humans, because wages were less. So they like seeing this tick down. This comes out the first Friday of every month. This is the economy, by the way. This is the data. Of all the datas there are out there, this is actually it. This is the health of the economy. By the way, it's lagging, but it's something that everybody looks at, because it's what the Fed will look at. to guide their forwardness. And unfortunately, you know, it is delayed and the numbers are fudged. So you got to take everything in context. Workers earned less wages, which is less inflationary. So that's why you're probably wondering, like, how come workers earning less is important? Well, it just means that the economy is not running as hot on their data, which means people aren't demanding higher and higher salaries. That's why they like seeing this number tick down. Also, unemployment rate spiked up to 3.8%. I think it was the biggest spike in a long while. So this 3.8%, it was long. The last time it was here was May 2022. So just to give you an idea of what's happening here. So, you know, you never know, man. If unemployment starts ticking towards 4%, you're going to see some mayhem, perhaps, in the bond market. And don't forget, the US Fed, right, it's on a mission to destroy people's livelihoods because it's the only tool it's got. The only tool it's got is to wipe people out. And then eventually they're going to go too far. And then we're going to see the money printer turn back on again. And this is the unemployment rate visualized. If you notice something about it, whenever it ticks up, it goes really big. Now, this was zombie virus. Don't worry about that. But as you can see, this is GFC. Whoa. And then this is something else. Here, this is the tech recession. You know what's interesting? We had a huge tech bubble and there was a very nasty wipeout for tech. But the unemployment rate only went up to here from 4 to like 6.5%. So, you know, that's something to think about. Perhaps it's also factoring in the 9/11, the buildings that crashed. So that could be it as well, which contributed to it. But that was a big S&P 500 crash. You had them. There's also the early 1990s. So there is going to be a spike. And when this starts happening, friends, it's over, by the way. Because the unemployment data is 6 months in the past. And they're gonna need to turn the money on the money printer. So that's what we're waiting for. We're waiting for eventually it's gonna start spiking up. But when it starts spiking up, the market's gonna front run it and they're gonna be like, oh, money printer, let's go. But we're just waiting to see how aggressive it's gonna be. So don't forget, ultimately, the US Federal Reserve has hiked rates to inflict pain. The market is cheering on people losing their jobs and livelihoods, which is disgusting. But hey, markets are all a scam anyway. They shouldn't even be down this much, to be honest. If they followed unemployment, you know, our bag should be like 5x higher. Why aren't they? It's because it's all a scam. But you got to play the scam right. We can beat them at their own game by remembering that we're peanut brains. Ponzi stocks and crypto crap, which is just what we are. We are all championing the idea of stimulus again. It could be yield curve control. They're thinking of the words, by the way. Right now in the background, they've already discussed, okay, in the next stimulus, we're not going to use the word QE because we don't want people to go buy like Dogecoin and stuff 500x anymore. They want to use another word. They'll probably use yield curve control and sustained money thing. You know, they're going to change the word. It's all about psychology and terms. Don't forget, friends, you know, always at the extremes of these cycles, we have people who say it'll never happen. Every single time, okay? Here we have Chad Dad, who is a Chad and also my friend. Chad Dad, aka Pete. As a business owner in the USA, I don't think it will. So he doesn't think the unemployment rate is going to spike up. This was, by the way, before the data. As you notice, after the data came out, it's already starting to spike up. So, okay? So too many people are retiring and too many girls are on OnlyFans. Not enough workers to fill positions. Yes, that's right. Now, that's why I want to tell you, this is a lagging indicator. Unemployment rate is very lagging. It's 6 months in the past. So we're all waiting to see the PMI and the other forward-looking stuff. But for now, we're going to take it as it comes. Don't forget, we still got the Bitcoin spot ETF, and we're always going to watch that danger zone of Bitcoin. Like, subscribe, but not tell mom and dad. We love and appreciate them. A banana a day is going to keep those bears away. Catch you in the next one.